give me the big reveal, man. What does the future hold, and what is your recommendation as an investor that's looking at this asset class?
Well, so when we have just looked at where pricing is and the expectation that JWB has that prices are going to go up in the future, we need to be thinking about what is that going to be doing to my return on investment, right? Because if you look at prices rising 8 to 10%, a common question is, what will happen with rents? Will rents keep up with that type of price increase? And we don't expect that to happen. So you got prices going up, rents are going to go up, but it's not going to be as much, right? And when you have prices going up, what's going to happen is that's going to decrease your cash flow on your investment. All right. The positive cash flow that you've come to know and love really is going to become more of a luxury than a requirement when it comes to this asset class. Because the other thing we have to consider is interest rates. We talked about how interest rates are incredibly low. And Pablo, you were able to close in the 3%, along with another one of our guests on the show. Well, that's really cool. What happens in future years when your interest rates go back up? They're going to go up at some point. They've never been this low. What happens when they go up to 5%? And what's going to happen is it's called cap rate compression. And I wanted to give people some perspective on investing in rental properties, right? People have been investing in rental properties for decades, but this idea of getting positive cash flow is a relatively new concept, right? The most successful rental property investors over the years have invested because of all 5 of the profit centers. But really over the last decade, investors have paid attention to only one profit center, which has been positive cash flow. Now there's 5 profit centers out there, right? Positive cash flow, tax savings, principal pay down, home price appreciation, and inflation hedging. And people have been only paying attention to positive cash flow. Pablo, do you know which of the 5 is the greatest factor when it comes to your overall return on investment?
I do, Greg. It happens to be home price appreciation.
There you go. It's home price appreciation is actually the biggest factor, especially when you use financing, right? So, and that's not to say that you have to focus 100% on home price appreciation, but that just should give you some insight to know that it's not all about positive cash flow, right? Books have been written for decades about the idea of just buying an asset that's going to pay for itself and holding on for the long haul, which is what we preach here. And that over time, especially if you use debt effectively, you're going to wind up with a great return on investment and control of your financial future in whatever you invest through rental properties. So that's really where I see us going. And I'm thinking years in the future now, right? I'm thinking that you're going to see cash flows compress. You're going to see cash flow become a luxury. And the really cool thing is that if you look at all 5 of the profit centers and you compare your estimated return on investment for all 5 of the profit centers, even if cash flows decrease substantially, you're still going to have a pretty good argument that there's a place for rental properties in your portfolio compared to the stock markets or bonds, especially, right? Or other investment asset classes. So I think that's where it's going to go long term. You're going to see rising home prices and interest rates, especially over the next coming years, start to decrease cash flows. And I should probably point out that JWB is well positioned for this, right? We have seen this coming for years and years and years. That's why we have bought so much land that we are building out right now, which has positive cash flow in it. So I don't want people to feel like this is a doomsday scenario where JWB is not going to have cash flow and positive cash flow for you. We do, and we do. We're always thinking years in advance. But those cash flows will become smaller, even for JWB. And I think for those of us who are investing in other markets right now, I really want you to be listening, because other markets and other turnkey providers are not as well equipped to handle this. And you might know this because this is why when you go to those other markets and those other providers right now, they say, sounds great, I'd love to sell you a property, but I don't have one, so I'm going to put you on a waiting list. And what you're going to see over time is that a lot of the folks that ran into the turnkey space over the last couple of years as turnkey providers are going to exit that space. They're going to do other things in real estate because they just can't make the numbers work. And as a business, you just can't survive for that long by putting people on waiting lists. So I think your investments here in Jacksonville, we are in a great place. We have cash flow, we have positive cash flow. You're going to be able to benefit from all 5 profit centers. You should expect that prices will be going up. You should expect that cash flows are going to be coming down slightly. And the biggest thing is that a lot of people have this idea that they're going to put a certain amount of money into rental properties. And if you're one of those people and you say, I've been planning on buying one house a year for the next 5 years, that is the biggest opportunity, I think, to help somebody make a better return on their investment. Because when you look at low interest rates right now and low prices today compared to what they will be, if you just reposition that same amount of money that you had targeted to spend in rental properties and you front load it, you're going to have much better returns from all 5 profit centers today than you most likely will 1 year from now, 2 years from now, 3 years from now.
You spoke for 5 minutes, Gregg. I'm going to succinctly say this asset class will continue to perform in the future. When you look around, it's still going to have really, really attractive qualities, but today it happens to be more attractive than it'll be tomorrow, and tomorrow it'll be more attractive than it'll be the day after, right? So it is a window of time that we've lived in that makes this thing particularly attractive. And that window is now starting to close, and it will come a little bit back down to earth, but it'll still perform well, and there will always be a place for it in your portfolio. It's just that right now the getting's good.
Exactly.
Okay, cool.